In this video, we all understand the real power of fine-tuned 5 minutes high liquidity zones. I am Pratap here. Today is 7th February 2025. In this video, I am going to evaluate the performance of high liquidity zones generated in the previous end of the day report. Before that, please understand we are providing complete free training on supply demand zone price action. Some of you might be knowing the cost of the training is over 8,000 US dollars, but we are providing complete free training at our NeoStock YouTube channel. So to access all these training lessons at our NeoStock YouTube homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the Community tab. You get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. We are at a supply demand zone price action course YouTube playlist. I kept all the training lessons in this playlist. You need to start your training from lesson 1.1. That lesson is available at the bottom of the page. So scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one according to the training instructions I have mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. Please join at our Telegram channel. At the top of the window, you will find pinned messages. Click on the pinned messages. You will find all the training instructions. If you learn this course according to my training instructions, you will become a very good independent trader in next 2 to 3 months time period. Now let's get into the analysis discussion. Yesterday, end of the day, we identified 1, 2, 3, 4, 5, 6, 7, 8 high liquidity zones from daily and 75 minutes time frame. And we got 2 very good trades, excellent trades. First one is JK Cement. JK Cement is a 75 minutes high liquidity zone, rally base rally identified by our software. And this 75 minutes zone, we need to fine tune as per the concepts you learned in lesson 21.3, the HLQ zone strategy that I explained in lesson 21.3. So from 75 minutes time frame, go to 15 minutes time frame. Inside the 15 minutes time frame, we have identified a failed ERC candle as a rally candle, or maybe you may also consider drop, but okay, this is a rally, 1, 2, 3 base candles and a rally candle. Or you can also treat like this. Rally 1, 2, 3, 4, 5, 6 base candles and a rally. That way is also. Or drop 1, 2, 3, 4, 5 base candles, rally. That way also you can trade. Okay, within this, but our interest is on the fine-tuned 5 minute zone. So within this 15 minutes area, we have a fine-tuned 5 minute zone. Look into this zone. We have a drop, we have a base, we have a rally. You may say this rally candle is not so great. Yes, that's true. But observe here. This is the area prices are keep on holding, keep on holding. Most interestingly, if you draw a horizontal line here, see what is the low of this candle? 4824. Low of this candle? 4824. Low of this candle? 4824. See here. Even later when the prices came to this zone and tested, here low of this candle 4823.95. That means 4824. And today we got the test from this area, and again prices moved up to 15 minutes target zone. So that means this is the area institutions kept a very strong institutional order flow. This is a high liquidity zone. Keep on, this is the area it is holding. and multiple times it is testing. This is when it is tested first time 4th February, next time again 6th February, and today 7th February. This is how this zone is keep on holding the prices. You can also treat here, see, LOTL zone is also created. Drop 1, 2, 3, 4 base candles and again a rally candle. Drop, base, rally. So this is also another characteristic of the high liquidity zone, LOTL zone creations from this. When a LOTL zone is created from this, it will again add a new order flows into this area. And today it has given an excellent trade up to 15 minutes target zone. Let me go to the 15 minutes time frame. Here you have a 15 minute zone. You can consider this is a failed ERC as a leg-in. You have 1, 2, 3 base candles, drop this 15 minute zone. Prices entered. When it gave you the entry, it gave you the entry at 10 o'clock 30 minutes, 15 minutes candle. When it reached the target, at 11 o'clock 30 minutes. That means within 1 hour, this trade almost reached the 15 minutes target. Of course, if you really want to know where exactly it reached, this is the candle. We need to wait. But generally what we do, a little before we will exit with some stop buffer. Probably in these candles, you might have exited our trade. If you are looking for even the small profit, probably you should wait up to 13:45. That means another 2 hours to get the small profit. So this is the reason why many times we use buffers. But of course, according to HLQ zone, strategy point of view, finally prices reached this target. This is a statistics calculations point of view, but we need to look for real practical trade point of view. Practical trade, somewhere in these candles you might have exited. Why we exit a little before? Because previously also you see, huge rejection before entering into this zone. That means this zone is having a very strong institutional order flow. That is the reason why just before the previous high, you will exit. These are the practical things, practical versus theory. Theoretically, it reached the target, but practically, before reach, we will exit. But anyway, theoretically, how much profit we got? Maximum profit. Let us look into that. JK Cement has given 12,631 till the 15 minutes target, which is 11.3% ROA. Maybe if you would have exited a little before here, somewhere here, you would have got maybe around maybe 10.5% ROA you would have got. But what is the advantage if you exit just before? Your money will be released immediately. You may invest that money in some other stock. Otherwise, see here, 2 hours, another 2 hours you have to wait till reach. That is not practical at all. But why we are calculating till 15? To check the performance of our zones, how really they are working. That's why please understand, the performance evaluation is different, and your real practical way of executing the trades where you exit before it reaches the target is different. Many of you people, especially newcomers, will think all these are all my trades. No, they are not my trades. These are the opportunities given by our high liquidity zone. So that's why I addressed this question in our Q&A videos. Many of you are not going through the Q&A videos. If you go through the Q&A videos, many points you will learn. All these are all opportunities. Whether I am taking the opportunity, whether you are taking the opportunity or not taking the opportunity, they are all different things. Every day, why I am analyzing these videos? Because this is a new strategy I developed and claiming it is having 80% success rate. And it is having 6% average intraday ROI. We've been monitoring these statistics for the last 15 months. Why we are monitoring? To prove our strategy is the best strategy in the market. No other strategy is having such a huge success rate, such a huge profit during the intraday. But we achieved with the help of the special algorithms I developed in the software. That's why every day we are monitoring these statistics. How well our zones worked, we are monitoring. So that is the reason behind every day why I am explaining these videos. Some of you are asking why I am not focusing on swing related trades and all. Because those are the strategies already developed in the past. The bullish trade setup, bearish trade setup, they are already there in the market for several years. But this HLQ zone strategy is a new strategy I developed. I have to prove this is the best strategy. That is the reason why I am focusing on this. That too, I am not analyzing the stocks. You might have observed. Analyzing means before taking the trades. I am doing only performance evaluation. That is after the live market hours. To check how our software results are working. That's it. That is not my goal. That is only my goal. I am not helping anyone by analyzing before the market, because I can't do that. I am not a SEBI registered. Because I am not a SEBI, because that is the reason why every YouTube video I am declaring. If you go to the YouTube channel and look into the declaration in the description of every video, whatever the analysis I am doing is only performance evaluation, only for educational purpose, not for recommending the trades. So this is one of the reasons why. But how to use swing related trades, I am recording in the videos for training point of view, and for future you will be using how to analyze. But I am not doing that every day, because I can't give you the recommendations. Once in a while I do, only for education purpose, because I am providing training to you. You need to learn the concepts. So please understand, this is not the analysis of the HLQ zones. This is the performance evaluation of the HLQ zones. Hope you got the clarity. Because recently many people were asking about swing related analysis. That analysis already we did in our training course. But live charts analysis is not possible, because I am not doing any live chart analysis. I am expecting you people learn the concepts perfectly, practice, and then you should do on your own. Then only you will become independent trader. If I am doing, you never be an independent trader. Okay, this is about JK Cement. Next one is Maruti. Maruti is another one. This is also high liquidity, fine-tuned high liquidity zone inside 75-minute zone. Look into the 75-minute zone, how our software identified this zone. Rally base rally. This is how our software identified this as a high liquidity zone. But if you look inside the 15-minute zone, see 15-minute zone is having a drop base rally. Here you have a drop base rally. And within this 15-minute zone, we have a fine-tuned 5-minute zone. So here we have a rally candle. You have one base candle, and then you have a rally candle. Sorry, directly I get into 5 minutes, right? First let me go to 15 minutes. Inside 15 minutes, we have a drop base rally. This is the 15 minutes zone. Within the 15-minute zone, 5 minutes fine-tuned zone, which is a high liquidity zone. We have a rally base rally. And this rally base rally is acting as a high liquidity zone. Several times it is tested. See, first time it is tested, see, it gave a very good move. Again came close to the zone, again close, again moved up, again third time, fourth time. This time it gave a very big push. Not only that, here you see drop base rally is created again. LOTL. Of course, here also see drop base rally. So every time they are adding new order flows into this zone. And this is happened on 5th February. This is 6th February, yesterday. This is day before yesterday. See, once again prices came into the zone and again moved up. Again you see drop, base, rally. Again it added new order flow. See, today it entered into the zone, and after that it reached the target, and within a short period the trade is completed. See, when it gave you the entry at 9 o'clock 45 minutes candle, and when it reached the target at 10 o'clock 10 minutes 5 minutes candle. That means within 25 minutes the trade is completed. Observe carefully, the trade is completed at 10 o'clock 10 minutes candle. If you want to see the exact 1 minute candles, when you got the trade is at 9 o'clock 45 minutes 1 minute candle, you got the trade. It gave you multiple trades. In case if you miss another 2 more candles, that means price stayed here for some time. So definitely you got a very good trade. There is no question of missing the trade here. And then it reached the target at 10 o'clock 11 minutes. Did you observe? That means within 26 minutes, I can say less than half an hour, your trade is completed. Within half an hour, your trade is completed. The moment you complete the trade, your money is released. Then same money again next you might have used in JK Cement. Go to the JK Cement chart. When you got the trade in JK Cement, see exactly here when you got. Let me remove this tool, you will get clarity. See here, you got the trade in 10 o'clock 33 minutes. When you closed the Maruti trade at 10 o'clock 11 minutes. And when you got JK Cement at 10 o'clock 33 minutes. That means same capital you used in Maruti is released, and same capital you used in JK Cement, and maybe you might have exited JK Cement somewhere at 11 o'clock 44 or 45 minutes. So this is a house with the using same capital. You know how much ROI you might have captured today, both together? You might have captured both together 15.4% ROI you would have captured. Same capital you invested. And margin cost is almost same both the trades. Around 1,12,000 or 13,000. Both are almost similar, just maybe 500 or 1,000 rupees difference, nothing more. Same capital. How beautifully you got the trades, and both are fine-tuned high liquidity zones, 5 minutes high liquidity zones. That is the power of high liquidity. See, the biggest advantage of high liquidity zones, you get the return quickly. And fine-tuned 5 minutes is a high liquidity zone, you get the return even much more quickly. When you get returns much more quick, what is the advantage? Your money will be released immediately. Because quickly you got the profits, your money will be released, same money again you use for buying some other stock. That is the power of fine-tuned 5 minutes high liquidity zones. You got it right. So this is what I meant by why I mentioned in the beginning of the video. Today you will understand the power of fine-tuned 5 minute zones. Fine-tuned 5 minute high liquidity zone. Fine-tuned 5 minutes zone is different. 5 minutes, fine-tuned 5 minutes high liquidity zone is different. High liquidity zone means you think it supports multi-testing. Of course, that is. But the main advantage of 5 minutes, fine-tuned 5 minute zones, they push the prices so fast. You get the return so fast. That is the beauty of high liquidity zones. See, making money is different. Making money quickly is different. Do you agree with this statement? Why we are all getting so much profits with this HLQ zone strategy? Because this strategy is giving you the money so quickly. It is giving big money. And fast way it is giving. This is the beauty of a high liquidity zone concept. See how quickly it has given the money. Everything happened in just half an hour. Okay, Maruti, how much profit it has given within half an hour? Maruti has given 4,687, which is 4.1% ROA. 11% it gave in 1 hour. 4 point, maybe it is you would have exited a little, maybe around 10.3 or 10.4% you would have got within 1 hour. To get remaining 1%, we waited for 2 hours. Because 11.3 I calculated till this 15 minutes target for JK Cement. So till it reached the target. See, this is the time consumed. But practically you might have exited somewhere here. But anyway, Maruti has given 4.1% ROA as per one futures margin cost. So these are the two successful trades, and one trade went inside a particular zone, but we didn't get the trade. But practically, if you want to see as an experienced person, actually the trade was an aggressive trade setup. You would have got, because I stopped focusing on aggressive trades nowadays, unless the trade is a 5 minutes high liquidity zone, not fine tuned. The 5 minutes high liquidity zone, aggressive trade, I am focusing. Remaining all are, I am not focusing much unless they have a minimum 2 price action close, because nowadays many of you people made mistakes on the aggressive trades. Nowadays means previous days. I mean, for fast in the last 3 months or 4 months back, many people made mistakes by using aggressive without fine tuning, directly taking trades in the 5 minute zones, not properly calculating the price action close. So that is the reason why, if you might have observed last 3-4 months, I am not focusing on the aggressive trades at all. If I don't focus, what will happen? You won't be having any learning. So that's why I am not considering the trades, because I am keeping Excel sheet. By looking into the data Excel sheet, you are getting excited and taking aggressive trades without proper price action clues understanding. Anyway, without aggressive trades, we are getting good profits, right? Why you should go to aggressive trade and waste your chances by making mistakes? So that's why nowadays I am not focusing. But still, you people get experience. So to gain experience point of view, sometimes I am focusing on them. One of the trades you missed, I will be showing you. But before that, let us look into all the stocks which we haven't got the trades. So first, Indian Hotels is a daily high liquidity zone. It's a drop base rally. See here, we have a very big zone, drop base rally. This one I fine tuned with 75 minutes time frame. 75 minute zone is also same, drop base rally. Same zone comes 75 minutes also. A very big zone. That's why I didn't specially drawn. Directly went to 15 minutes. 15 minutes you have failed ERC candle as a rally, base rally. If you consider drop, you have to again draw the zone till the bottom. Like this you have to draw. Okay, I am considering this as a dynamic viewpoint of your rally, base rally, and within this 5 minute zone. Rally, 2 base candles and a rally. But I have some concern about this candle, failed ERC candle. So I have some doubts about this zone. Maybe it will be violated. Why I have drawn for experimental point of view, not for trading point of view. Please remember, this is the reason. But anyway, today prices didn't come. The reason why I have drawn this zone is not for the trading point of view, experimental point of view I have drawn. So because I have some concern about this candle. When we have concern, better leave it. Maybe this is the area may work, maybe rally, base rally, but it is a medium size candle. That is again another concern. That's why. But a beauty is, here you have this zone is having a 5 minutes horizon. See here, long back, the horizon is created. When this is on 14th November, we have a rally, you have a base candle, you have a rally candle, and this 5-minute zone is the origin for this entire daily zone. Let me go to the daily time frame, you get better clarity. See, this is the one we have drawn, the 5-minute zone. See, from this 5-minute zone, it picked up the orders. Just touched that particular 5-minute zone. How sharply the prices are moved. That means this is the area we might be having a very strong institutional order flow. Such kind of zones we should not miss. But anyway, today price did not come. Next one is Manappuram. Manappuram is also a daily high liquidity demand zone. We have a drop, 2 base candles and a rally. This one I fine tuned with 75 minutes time frame. Here you have drop candle, a base candle, again a rally candle, a very big candle, high exposure. Drop, base, rally. This is entire thing is 75. Inside this 75, we have a 15-minute zone. See here, we have failed ERC candle leg in as a rally, base, rally, follow through candle. This is the 15-minute zone. Within the 15, we have a fine-tuned 5-minute zone. That fine-tuned 5-minute zone is also a high liquidity zone. See here you get a drop, base, rally, but clarity is missing. This is a failed ERC candle, right? So that's why what I did, I went to 3 minutes, because sometimes 3-minute zones can be used as a supplement to the 5 minutes. It may not be complete replacement, supplement, when 5-minute zone is clarity. But actually, the beauty is the moment you go to the 3 minutes, this leg out, here institutions kept the real institutional order flow. You might have missed it when you looked into 5 minutes. Because clarity is missing here, I went to 3 minutes. Go to the 3 minutes. Then you see the 3 minutes high liquidity zone. See here, in the leg out, you have this drop candle, base candle, a rally candle. This is the area institutions kept a huge order flow. See, this is tested first time, tested second time, tested third time, again tested fourth. This time prices came inside and again moved up. Again tested fifth time. Now again you see drop, base, rally created. A new order flows are added. Sixth time again drop, base, rally created. New order flows are added. Seventh time again drop, base, rally is created. And new order flows are added. Every time prices are entering into this zone, institutions are adding new order flows into the zone. That way the power of this zone is very, very strong now. Definitely we should not miss our trade in this 5-minute zone. But prices did not enter. Look into the daily zone. Today prices did not enter into this high liquidity zone, but prices entered into this zone, right? How sharply prices moved. How it is possible? We don't have a 75-minute zone here, but how it moved? There you have an aggressive trade setup. Go to the 15-minute zone. You will be having a 15-minute zone here. See here, you have a 15-minute zone. But is it inside a 75-minute zone? No, it is not inside 75. It is directly inside daily high liquidity zone. Earlier prices went and prices were trying to reach, but something is pushing. That means the order flow in this area might be strong. And today prices came and sharply moved up. Today morning 9:15 candle. After that prices entered into the 5-minute zone. Here we have a 5-minute zone. Let me show you. Fine-tuned 5-minute zone. See, this is a medium size leg candle. This is a medium size base candle and a rally candle. You draw the zone, type to proximal. See, this is today morning 9:15. This is another price action clue. Sharply prices moved up. This itself indication in this area there is a strong institutional order flow. Now prices came and again here institutions once again added a new order flow and again pushed. Next time it may give you another trade opportunity, the same zone. Why? Maybe this might be working as a high liquidity zone. A new order flows are added again. But if anybody today, if you would have taken this as an aggressive trade, it would have given you very good profit. Is it reached 15 minutes target zone? Yes. Here we have a 15 minutes target zone. It went beyond. Maybe if you used any trailing stop, you would have got even more profit. But anyway, this itself is a good profit. You may say, after taking the trade again, it created drop, 2 base candles drop. Maybe we have to exit here. Maybe yes, you have to exit, but if you use a trailing stop, it might have reached because none of the zones might have been violated here. Go to the 5 minutes. So sharply it moved. Go to even 1 minute. None of the 1 minute zones would have been violated here. Sorry. But anyway, at present I am not adding these aggressive trades into Excel sheet, mainly to discourage members to look into aggressive trades at this stage, because you are not experienced people. Without experience, getting into aggressive trade setups is very, very dangerous, because a lot of calculations you have to do. Without experience, how so many calculations get into your mind? Simply we say, okay, aggressive trades are not working. I am taking a trade, it failed. It failed because you didn't calculate properly, the calculations part. Understanding the price action is not at your best level. That could be the reason you took into a wrong aggressive trade setup. So this is the main reason why I am discouraging you people to get into aggressive trades. We get into only fine-tuned zones only. Aggressive trade if the 5 minute zone is a high liquidity zone. If that confirmation is there, then we go for aggressive trade. But remember, the trades today we discussed is not aggressive trades. They are not 5 minutes aggressive trades. Today what we discussed is fine-tuned 5 minutes high liquidity zones. There is a difference between a 5 minute HLQ zone and a fine-tuned 5 minutes HLQ zone. There is a difference. 5 minutes high liquidity zone means without any fine-tuning. That means without any 15 minute zone. Maybe it is directly there inside the 75 minute zone or daily zone. But fine-tuned means the 5 minutes high liquidity zone should be inside a 15 minute zone. That should be inside a 75 minute zone. That should be inside a daily zone, if your daily zone is a high liquidity zone. So there is a difference. Hope you got the clarity. What is the difference between a 5 minutes high liquidity zone and a fine-tuned 5 minutes high liquidity zone? Today's topic is about fine-tuned 5 minutes high liquidity zones. The power that already we understood from both the trades. So this is one trade you would have missed, Manappuram. Otherwise, that also a very good aggressive trade. And next one is Marico. Marico already we discussed earlier, this zone. I explained. Drop 2 base candles and rally, and we have 2 75 minute zones. We have a failed ERC rally, base rally. It is not having fine-tuned zone. Similarly, here also we have drop 1, 2, 3 rally candle, medium size candle and rally. This is not having fine-tuned 5 minute zone, 15 minute zone, sorry. See 15 minute zone, why I didn't draw? If you look into this, we have a rally candle. You have another rally candle, in between no base candles. So that's why such kind of zones will be violated easily. So today it is PRs, this zone is PRs. Prices came, nowhere it is maybe here some kind of movement is there. Maybe some 5-minute zone might be here at the bottom. Some, or maybe some horizon might be here. No proper horizon here. Maybe institutions created a new 5-minute zone somewhere here and pushed it. Yeah, maybe see here, drop base rally, they pushed market for some extent, but not because of existing zones, and finally came down. Similarly, bottom one is also not having any fine-tuned zone, because see the structure, all these candles, easily such kind of zones will be violated. That's why we didn't plan any trades in Marico. Next one is the HDFC Bank. HDFC Bank is having a daily high liquidity supply zone. Our software has given drop 1, 2, 3 candles, base and drop candle, and this one fine tuned with 75 minutes time frame. Here we have a 75-minute zone, rally 1, 2, 3, 4 base candles and a drop candle, and within this 75 again fine tuned with 15 minutes time frame. Here two 15-minute zones identified, rally, base, drop, again drop, base, drop. Two fine-tuned 15-minute zones. Within these 15-minute zones, we have two fine-tuned 5-minute zones. Each one is having one fine-tuned zone. So here we have a rally, 1, 2, 3, 4 base candles and drop, but here I didn't consider this, because if you expand, you see, you get clarity. So you have a drop, you have a base, you have a drop. That way I identified this 5-minute zone. And here you have a drop, 1, 2, 3 base candles and drop candle. Failed ERC. But this zone, some concerns I have. See, again prices entered, picked up the orders and came down. But this is good. This may work or may not work. Some concerns are there. But we will see. Those who can take risk can take a trade, otherwise focus on the above one. But anyway, today we didn't get a trade in this zone. Next one is Infosys. This is also daily high liquidity supply zone. Drop, base, drop. This one fine tuned with 75 minutes time frame. Here drop, 2 base candles and drop. Fine tuned with 15 minutes time frame. In the 15 minutes time frame, here I don't have proper price structures here, but have you noticed we have a drop, base, drop. So this is the horizon. This drop, base, drop is the horizon for this entire fine-tuned 75-minute zone. 15 minutes horizon for 75 minutes fine-tuned zone. Now go to the 5 minutes time frame. Some interesting point you will see. You have a drop, 2 base candles and a drop candle. This is the horizon. Almost till the distal line it reached, but okay. Next time again tested from the bottom. Again tested from here. So what is the interesting thing we have to observe here? What I did here, I am not really happy with this leg out. So for clarification point of view, I went to 3 minutes time frame, because 3 minutes could be a supplement to the 5 minute zone. So interestingly, you see 3 minutes, how perfectly the zone is looking. You have a rally candle, you have a base candle, you have a drop candle. So whatever we have drawn in 5 minutes, now it is looking with much perfection. See how sharply the rejections you are seeing on the 1 minute zone. And multiple times how it is tested clearly you are seeing here in the 3 minutes time frame. See, every time prices are going sharply, they are coming down. They are going sharply, they are coming down. They went again sharply, it came down. Even here, with the rejection, sharply came down. So that means this 5 minute zone is a fine-tuned. This is the origin. This is the origin for this entire fine-tuned 75 minute zone. And moreover, this origin 5 minute zone is inside 15 minutes origin. It's a fine-tuned. This is a fine-tuned 5 minutes origin. It is not a simple 5 minutes origin. This is a fine-tuned 5 minutes origin. So that is the reason why it has given several tests. So that is the beauty of this particular zone. But today anyway, prices did not enter into the zone. And last one is Aarti Industries. This is a 75 minutes high liquidity supply zone. And this zone was created in 8th November 2024. Drop base, 2 base candles and a drop candle. And this is having a 5 minutes origin, and also it is having a fine-tuned 5 minute zone in the recent price action. Go to 15 minutes time frame. A failed ERC as a rally, 2 base candles and a drop candle, follow through candles. 15 minute zone. Inside the 15, you have a fine-tuned 5 minute zone. See here. So this is a failed ERC as a rally candle. See this candle. This is a rally failed ERC as a leg-in. Then 1, 2, 3, 4, 5 base candles and a drop candle. If you consider this as a rally, you will reject this zone because all these 1, 2, 3, 4, 5, 6, 7 candles. But this is a failed ERC that way because this is a big candle, large candle. See, bigger than all these candles. Or you can also draw like this. You can consider this is a drop candle. This is the way also you can draw. This is also somewhat big. But anyway, let me stick to what I have drawn. And more important, and another thing why I have given importance is, see, while prices went down, and after that again, see, prices were moving again, somewhat came very close to. If I draw week to week, you will understand. See, prices came very close to this zone and again moved down. That means the order flow in this area might be stronger. That's why I kept this zone. And now go to the origin of this zone. The 5 minutes. Here you see we have a drop, 2 base candles and a drop candle with some pro gap is also there here. So from that area it picked up the orders and then again prices came down. Not only that, some kind of LOTL is also created. Rally, base, drop. Again new order flows are added and then prices came and this leg out, 75 minutes leg out is completed. So this origin is also important. So this is how we fine-tuned Aarti Industries. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.